It's a brutal day for markets today on Friday, August 2nd, as the new jobs report came out. The unemployment rate now ticked up to 4.3%. In response, the NASDAQ is down 3%. The VIX spiked up 56% today in one day, the highest level it's been since 2022. Gold's down, Bitcoin's down as well. What's going on? What's causing this market crash? Is there a bigger picture than just the jobs report that was weaker than expected? And by the way, CME Fed Watch Tool is now predicting an 80% chance of a 50 basis point cut by September. That's huge. We'll talk about what's going on today and what's next with our next guest, Clem Chambers, CEO of Online Blockchain. This episode is brought to you by iTrust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%. If you'd like to open a new account with cash, we'll roll over an existing account. Click on itrust.capital/David in the link down below to learn more and get started. And if you use my referral link to sign up, you will get $100 in signing bonuses. Welcome back to the show, Clem. Always good to see you.
Nice to be back, David.
Week jobs report came out today. Non-farm payrolls grew by just 114,000 last month. The Labor Department reported a slowing from 179,000 jobs added in June and below the 185,000 expected. Importantly, the unemployment rate went up again, 4.3% now. It's the highest it's been in a couple of years. It just keeps going up. Markets did not take that well. I wonder why the markets didn't take that well. Wouldn't a weak jobs report incentivize the Fed to cut by September, which would be good for equity markets, which is what people are pricing in?
Well, there was a bad producers index report yesterday, and now the jobs report today, and that's not going to put people in a good mood. The old story was, good news is bad news, and bad news is good news, and sometimes bad news is bad news, and sometimes good news is good news. And an element of truth to that, but it's also a very good way of explaining everything away. And I think the thing that people need to kind of realize and hold on to is it's about money flows. And when money's coming into the economy, when money's been printed, for example, or they're just having a great time making stuff, when money comes in, stocks go up. And when money goes out, stocks go down. And what happened in Japan is that they've got interest rates now. Before, they'd pay you to borrow money. Well, what do you do when they pay you to borrow money? Well, you sell your yen for dollars and you go stick it in NVIDIA. And then NVIDIA goes up 20%. You've made a lot of money, haven't you? It's free money. So the carry trades in the stock market are a very, very big deal. Now, the carry trades is when you borrow money and you stick it into things that will give you returns. So you imagine that you're a fund manager and you go, well, everybody's borrowing money and putting it into stocks. So I'm going to do that too, because stocks can only go up if people are borrowing money to put them into stocks. And that becomes a merry-go-round. It becomes a virtuous circle or vicious circle, depending on your point of view. But when suddenly Japan says, oh, hold on a minute, we're going to charge you money now to borrow money, and all those people that have borrowed fortunes to do these carry trades suddenly go, oh no, I'm levered up to my neck. Oh, I better start pulling my neck in. Better start pulling my horns in. Better start selling those stocks, turning it back into yen. And funny enough, the yen goes up against the dollar like it's doing right now. And funny enough, the flow of money starts to go in the opposite direction. So I actually would say that what we're seeing now is that very thing. Because when this all kicked off, Bitcoin went down in a bump, just went plunk. Well, what's that got to do with manufacturing report? What's that got to do with the job numbers? Well, I'll tell you what it's got to do. When Japan is putting their money back and trying to push the yen up because it's collapsed over the last few months, you have to pull your money out of Bitcoin, don't you, and turn it back into yen as well. So all that money you borrowed to put into assets, you have to start liquidating your assets. So the money flow, that is the thing to watch. When they print money, up goes assets. When they pull in money, down goes assets. And since COVID, they've been managing money supply because there was too much of it. And they've been managing money supply in the US to keep everything in a Goldilocks area. Well, Japan has just said, oh, yen too weak now. We've got to actually have interest rates. We've got to start pulling all that money we've invested abroad back into Japan, back into yen, and get the yen back up. Well, that means the tide of money, at least for a few days, has gone out, and down's come assets in the UK, for example, really heavily. And funny enough, what's been hit are the sort of shares that pay fat dividends at 5 or 6%. And when you can borrow it at 0%, or actually get paid to borrow it in Japan, and you can buy some good assets abroad, you can see why you might want to do that, and then you hedge your currency and blah blah blah. So then suddenly Japan says, yeah, you need to kind of bring that money back now and put it back into the yen because we put interest rates up and we're going to make it expensive for you. That's going to hit all those assets. So when you see the market go down in a lump, so for example, when it went down the lump yesterday, I go, oh, what's going on there? Are they going to blow up the Middle East? Go have a look at gold. Gold hasn't gone up. Oh, well, why has Bitcoin gone down as well? Oh, money's flowing out. Where's the money flowing out? Who's sucking money out of the economy? Oh, Japan. Well, that'll do it. So that is what I think is going on.
Okay, that makes a lot of sense, Clem. The yen has been appreciating for a number of weeks, and the Bank of Japan has been speculated to have intervened by the order of 6 trillion yen. Just today, the yen appreciated yet again. I'll show a chart. Line just dropped USD to the yen.
Because they've got up interest rates. They've got positive interest rates. Japan, positive interest rates. You have to pay to borrow money there now. I mean, what's going on?
So, okay, since we're talking about the yen, what would you do? Would you trade the yen right now? Would you long? Would you long yen?
I've got a problem with foreign currency, and that it's not a positive sum game. Okay, this is the basis of all investments should be this thought. Is it a positive sum game? Is it a negative sum game? Or is it a zero sum game? Okay, do not touch anything that's not a positive sum game. There's only one game in town that's a positive sum game, and that is equities. Yeah, if you go to a casino, it's a negative sum game. You will lose all your money. If you're playing a game which is 50-50, but you're having to pay to sit at the table or buy sandwiches or buy some drinks while you're playing it, you're going to be losing money. The only game that pays is one where there's money coming to the table that you're playing at. So you're sitting playing this game and they bring you sandwiches for free and they bring you drinks for free. And every now and again, they give you $20 to be sat there. That'll make you a shill, right? But anyway, to sit there and you get paid to play the game. And there's only one game in town. It's not commodities. It's not foreign exchange. It's not derivatives. It's not options. It's not futures. There's none of that funky stuff. It's good old fashioned stocks and shares. That's why I play it.
Yeah. Okay. So let's talk about stocks. So U.S. stock markets, the NASDAQ is now at the lowest level since May. I'm looking at the charts. It's basically wiped out all its gains since the beginning of the summer. Clem, is this crash going to continue? I'm calling it a crash because it's down from 18,000 all the way down to 16. Yeah.
Is it a bear? Are we in a bear or are we in a bull? The only thing you ever have to know in shares is which way is the market going? And if you don't know which way the market's going, what are you doing playing? Right? So which way is the market going? In the short term, it's going down, obviously. But is that a new bear market? And a new bear market is not when the market's fallen off the face of the earth. It was, it's fallen 25%. We're now in a bear. A bear is when it starts to fall. So have we entered a bear market now? And is it going to keep on going down? It's a good question. It's the $64,000 question, or only 64 million these days. And I think that the answer is no. Yeah, things cannot go up like that and keep going up like that. They just can't. You can't go exponential. The trees do not grow to the moon. Yeah. So at some point, you do get a correction. Now, the difference between a bull market and a bear market is the angle of the trend. That often is just a short-term correction in a bull market. And I would suspect that's where we are. Now, if there's some wheels to come off this particular truck that I don't know about, well, crashes happen. But I don't actually see that at the moment. If you look at what the Fed's doing with money supply, it stopped pulling it out. It has slowed the taper on the balance sheet, and it has stopped the pulling money out of the reverse repo, which means it's kind of going, it's kind of where we're comfortable at the moment. Let's slow down a bit for some time. So they obviously see there's money supply pressure in the system because they can see that. They've got the tools to see when there's cash flow pressures. So they've turned off we're going to get the balance sheet down. They've turned off, we're going to pull out the excess money. So they've stopped doing that. So that's a sign that they think things are under pressure. You've seen that under pressure come through in the unemployment numbers, which they probably got a good steer on earlier than we have by a long mark. And they've got a good view on things like the manufacturers index that was just there. I think it's Philadelphia. Not very good with your cities or your cheese spreads. And but that's two negative numbers that came out 2 days in a row that they would have known about for quite some time. Right? So they're obviously sensitive about the whole of the American economy going into a recessionary period, and they would like to keep it not to do that. So they've stopped pulling the money out of the US market. So you would think there would be a correction now, and that correction would be, painful and scary and worrying like they always are. And then you would see the end of that. So I would say, although I must say I've had a fantastic run the last sort of, few months, and I'm due to be beaten up by the market because you can't have it your own way all the time. Outside of that heuristic, I think it's a standard sit around and, twiddle your thumbs and just let it ride it out.
Okay, wait a minute. So a couple of things here. I'm going to bring up the VIX and also small caps and mid caps. The VIX first. The VIX is now at 29. So that is the highest level since 2022. It just went up in a straight line today. And this is not the only day we've had big single day corrections this year. It's happened quite a few times just in the last 6 weeks alone. The VIX didn't spike like it did today. There's just a lot of fear right now. Why?
Well, you say it's fear. I don't see it as I know they call it a fear index and all that. It's a what's going on index. Yeah. Because people say, well, why is bad news now? And because nobody like yesterday, I was flapping about it. I was doing great in the morning and suddenly I was, a big hole opened up and I fell in it. And I thought, well, what's going on there then? And I looked and I looked and I looked and I looked and I looked. And it's not obvious. It's not like something obvious happened because there was the producers index that wasn't great, but what it suddenly bang it fell. And if you're in the market and then suddenly you're not sure what's going on here, or if you work it out, you're not sure how far it will go. I mean, how far will it go in Japan? I mean, they've lost 7% or something like that last 2 days. I mean, so they've lost a big number in that they're having a proper correction. And if how long will it be that people are having to pull their money back to Japan to pay off their carry trades? So that's an unknown. And the bigger the unknown, the bigger the VIX, because VIX is a measure of uncertainty. And you can call that fear, but it doesn't have to be fear. It's just like, oh, I'm not sure what's going on here, or this was the margin of error yesterday, and now it's that big. And so the VIX goes from there to there. So it's really just the pricing mismatch in the options market, which is the margin of error has increased from the theoretical level that it should be at. And that, I would say, is uncertainty, not fear necessarily.
A couple of weeks ago when the large cap stocks, the tech stocks in particular, went down. I'm talking specifically on July 11th. A lot of money rotated into the small caps. The Russell 2000 on July 11th, when the last CPI print came out, went up a lot. It just shot up in a straight line and stayed there for a number of weeks. And now, ever since the beginning of this week, it's been going down. It's now basically wiped out almost all of its July gains. Clem, the narrative that there's a rotation into the small caps, I don't think we can say that anymore, can we?
Well, I mean, a rotation out of these incredibly highly valued shares that people have given up trying to work out why they're so valuable into something else. So small caps, I mean, there's a vast amount of money in those stocks. I mean, I can't remember the exact current percentage of the index, but is it 20%? It's a huge proportion of all the money in the world is in those 7 to 10 stocks. So when people start to go, well, I've done really well out of NVIDIA, I think maybe I should take some of my profits. Oh, what should I do with it? Oh, I'll stick some of it over there. All those small liquid stocks, so-called American small caps, which would be medium caps anywhere else, go to, yeah, because it's just the weight of money. Again, it's money flow, right? Well, once you've stopped doing that and you go, well, maybe I'm a little bit more worried than that. Maybe I should just keep it in cash. There you have it, right? So I always think about the money flow. Just think about the money flow. Think about where the money is going. Where is it coming from? What's happened to it? Where's it going to go into next? Is it going to stick around where it is? And the effect of these huge, huge reservoirs of money that are tied up in these assets.
Clem, what is money flowing into right now that it's going out of equities, it's coming out of Bitcoin, which we can talk about. I was looking at gold. Gold's down 1% on the day, which is a big move for gold for one day. Where is this money going to? Just cash?
Well, I mean, if it's all going back to Japan to buy the yen, that's where it's going. I mean, the idea is this: look, you're a Japanese bank or fund manager, and you can get as much free money as you like. All you got to do is be able to give it back. Okay, so you borrow it at 120 to the dollar. You go and you buy Nvidia. Up goes Nvidia. The yen goes down, so that's like a one-way trade because you're shorting the yen at 120. Now it's 130, so you've made 10 points there. It's 140, it's 145, it's one whatever it got to, right? From like 1010 a few years ago. So you've made all that money by shorting the yen. You've made all the profit on longing the Dow or the big stocks in the US. And then suddenly and you've hedged it all, so there's cost involved, but you're doing okay, right? And then suddenly they say, hey, now you've got to pay some interest. Maybe you're going to have to pay some more interest. And you go, ooh, well, I've done really, really well. And, I've got my neck out a bit here. I think I'm going to pull my neck in. So I'm going to sell 10% of my Nvidia and my Microsoft and my Amazon and my Facebook and my Tesla. And I'm going to put it back to Japan and turn it back into yen. So yen goes up and Nasdaq goes down. It's that simple.
I think maybe they're done taking their profits on their shorts in the sense that they're done selling. Maybe. I don't know. I'm
Well,
just
I mean,
saying,
they're buying again.
should we
They're
get in
buying
now?
yen. They're buying the yen. And I'm not, I don't like to trade currencies.
What?
Currencies are just a pain. But, I think you'll see that the yen is at least people are thinking, well, they've gone positive interest rates in Japan. What about if they do it again?
All right,
They've
so
been,
nothing can go up and down in a straight line, but the stock markets, particularly the Russell, for example, and even to some extent the Nasdaq has gone down in a straight line in a very short amount of time in the last week.
yeah.
So this straight line down, maybe if you're a trader or maybe a medium term investor, you're looking at this. Would you get in right now long the stock markets?
Well, you're sounding like a contraindicator for sure. And when people start to go, oh my God, that is the time to buy. But I would say that probably not now. I mean, I don't. It would have to go quite a lot further. You see, I'm not in Nvidia. I'm not in all these unbelievably highly valued stocks. I look at that and I get a nosebleed just thinking about it. But obviously, people who are in there and who've done very well out of it, they can quite easily panic and it can be a several day or a week or a 10-day thing, and then all of a sudden the Fed pulls that handle a bit and out comes the money and the banks have to stick it somewhere and they stick it in the index and the ETFs and up it goes again. So there's a lot of that going on. There's a lot of adjusting the flow of money at a governmental level to support the economies, to support the assets, to keep the economies on the rails. That is very hard to predict. And, if you have got good reasons to be in the stocks that you're in, you just ride it out.
So when the VIX goes up and you've got a lot of uncertainty, like you called it, what do you do? Do you just stay out and wait for this uncertainty to sort itself out? Or do you
Well,
find this
you,
as an opportunity to get in somehow? Yeah. What do you
you
do?
should never be in an asset if you don't know why you're in it. And if you didn't know why you were in it, whether it goes up or down, you shouldn't be in it. You should be out. You need to have a good, solid idea of why you're doing what you're doing. And then you're fine. And then you know what you're doing and you'll ride this stuff out. Or you'll say, well, I'm a buy and hold guy and I've done too well the last 2 years. I'm going to take a haircut, but in 5 years' time, I'm going to be much better off and I'm going to capture my 8% or whatever, and that's great. Well, if you're a gambler and you said, well, I've tripled my money in Nvidia, and now I'm scared, I'm going to run away. Well, that's a completely different game altogether. So you have to know what game you're playing, and you need to stick to your plan. And frankly, the American market has done incredibly well over a long period of time now, and it's quite possible to have a correction. The point is, it's not what you have to watch for is a market that doesn't go down like that, but goes across, just drifts off, and it drifts off, spikes up and floats down. That's the market you need to be scared of. A market that floats up and spikes down, well, that's your bull market, and it'll always float up and spike down. But every single one of those cycles, you'll end up higher up, and you'll end up in more profit.
Okay, let's talk about monetary policy and stocks now. Let's take the Bank of England as an example. The Bank of England cut rates yesterday, as you know, and the FTSE 100 didn't rally on the news. In fact, it just kept going down. So the narrative that the Fed cut is going to be great for equities. Well, the Bank of England, I mean, what's happening right now in the UK is kind of disproving that right now.
Well, look, first of all, the market doesn't look to tomorrow; it looks to next year. it if you look at prices now, it's what everybody, roughly speaking, considers is going where we're going to be in a 12 months time. It could be 9 months, it could be 14 months, but generally I always take it as being a year. So the price today is not because something's going to happen tomorrow, it's where we're going to be in a year. And the hive mind has worked out that trajectory. And if you look at the UK, well, it broke out of a horrible range and it's in a little bit of blue sky. It spiked up and has been up until the last couple of days at all-time highs. So it knows that was coming for quite some time, in fact, for months. And it came. And, all right, if it hadn't been this month, it would have been next month. But, that's just noise, isn't it? So the actual trajectory, long-term trajectory at the moment is well understood by the market. Now, whether it turns out that way or not is another matter. Normally, it's only the unexpected that makes these sort of things. And I think it was unexpected that Japan was going to come out and say, we're going to have interest rates now. And everyone went, whoa, hold on a minute. That's unexpected. What are they going to do next? And that's the sort of thing that spikes your uncertainty or fear, as you would put it, and makes the market drop like a rock. Now, how long does it take for the market to factor this in? So once it's factored in, you'll either see one of two things. It drifting down, which will mean bad things have happened and bad things are expected, or it'll start to drift up, which will mean that it's been now factored in to the fact that, life is not going to be so bad.
Okay, I'm looking at the CMA Fed Watch tool. There is now, this is crazy, 80% chance of a 50 basis point cut by September. Okay, we're talking about, the Fed just announced this week they're keeping rates unchanged, and a reporter specifically asked Powell if a 50 basis point cut is on the table. He said that's not something we're considering. He straight up just verbally rejected that idea. But now the market's pricing at an 80% chance of a 50 basis point cut in 2 months after today's jobs report came out. Clem, what's your take on this?
Well, there's a load of politically incorrect jokes that I'm not going to tell. But, effectively, if you're a central bank, if you're moving it at 0.5%, you are telling the world that you didn't know what you're doing. So, maybe 0.25% next time and then 0.25% thereafter. If you think about it, right, 0.25% is a big percentage of the overall lump. Yeah. And it's like a major move. When they move interest rates by 0.5%, that's a 10% move. That's like, using a sledgehammer, economic sledgehammer. Well, it's almost ridiculous that they even think in 0.25%, so they're not thinking in 0.1s. Yeah, because they should have the subtlety to move the biggest, most powerful lever in the whole of the economy by 0.1. Why are they even dealing in fractions when they should be dealing in decimals? Chinese central bank deals in decimals of 0.1. Yeah. So, don't underestimate how big a 0.5 cut would be. And it would show panic. And that would be bad right there, because then you've got even more uncertainty. I would say that, the markets are hot and frothy. And, we've had the return of the meme stock only a few weeks ago that underlines that we are in a sort of echo of that crazy period a few years ago. So you are going to get this volatile and somewhat unpredictable behavior, whether it's the top of the NASDAQ or the top of the S&P 500 or just the top of the big companies in there that a load of people have got their, all their money in, is another matter. I don't think so. I don't think we're going to see the end of the Magnificent Seven going down in a blaze of glory at the end of the movie. But you could do. I don't live in that area, because anything that gets up, 10 times sales, I go, what is that? But that's the American market for you. It's hard to gauge.
Are we going to get at least one 125 basis point cut in September, Clem?
Well, I don't see why you wouldn't get a cut or two by Christmas. Yeah, I still maintain they're not going to do anything dramatic between now and the election. They're only going to do stuff that is very, very meek and mild and as stable and as boring as possible. as boring as possible being the catchword. Yeah, because now you've got a proper race on.
Okay, so let's sum up today.
It's a
Crazy
bumper
day
ride,
today.
bumpy ride, not Armageddon. That's where my money is anyway.
Bumpy Ride, not Armageddon. That's a good title. I'll think about that. Thank you, Clem. The VIX went up 56% today. The Nasdaq is down 3%. Gold is down 1%. We talked about the Japanese reverse carry trade. Generally speaking, what are people so uncertain about? The unemployment rate ticked up to 4.3%. There's just lingering uncertainty, which we talked about. Why today? I mean, what's not clear to people right now?
Everybody could be away on holiday, and if all this money gets pulled out of the market or large sums get pulled out of the liquidity of the market, prices will go down. Yeah. And it's nothing to do with them and what they feel. And obviously, everyone will look at it and go, what's that? What's the explanation for that? Why is this unemployment figure, which is, yeah, not great, but I mean, is it that bad? Why has that done that to the market? Why, if uncertainty is up and fear is up, is gold down? Well, gold is down because money got pulled out of it. Like money got pulled out of stocks and money got pulled out of bonds and money got pulled out of pretty much everything. And therefore, it's all gone the way of having money pulled out of those markets. And that's what's happened. But obviously, it's not obvious. Something didn't happen. A rhinoceros didn't run down the street. It's something a lot more under the radar, which has people going, whoa. And then if you thought it was Japan pulling the rug, then you're going to say, well, how much more of that are they going to do? How long is that going to go for? Are they going to put it up to 0.5%? Are they going to put it up to 1%? Are they going to crash the Tokyo stock market? Is that going to roll? Are they going to crash? Are the banks all going to go bust? Is there going to be an international financial crisis? And then up goes your uncertainty a lot, and then prices go down, and everybody says it hasn't happened yet. It didn't happen. I'm still here. Oh, they've sorted that out over there. Okay, I'll get back in again, and then away it goes again.
That's good. Well, that's a good explanation, Clem. $67,000 for Bitcoin. Actually, 63 now. What am I talking about? 67 was old news. It's so volatile. 63,000 for 63,000 for Bitcoin. What's your view there? We had Donald Trump announce last weekend that if he were to be elected, Bitcoin strategic reserve is something that's on his agenda. Senator Cynthia Lummis just this week introduced legislation for the Bitcoin strategic reserve. So this is actually they're actually serious about it. The Bitcoin price is clearly not taking this seriously, or that maybe they are, and they're factoring in something else. Anyway, the Bitcoin price has been down. How are you factoring all this news?
I look at Bitcoin and all I see is this blooming great range, and it's actually drifting off a little bit, but that's probably boredom doing that. And there it is. It's stuck between 70,000, 60,000, give or take, and something has to happen to push it either one way or the other. And I'm it's really 50-50, 45, 55, 60-40 at best. What's going to happen next? But it's not enough to make me want to close my crypto out. But I sit there and I go, it's a heavy asset now. It's a heavy asset. The Ethereum ETF's out, apparently, so they say. It hasn't had a great take up for it. No one's gone, I want to buy lots of that Ethereum ETF. And, it's gone B2B. In the old days, it's a B2C market. And everybody loved the fact they could open up a crazy brokerage account with $10 and start trading crypto all day and all night and all weekend. Well, that world's gone away now. You can't do that anymore. Or you can do 24/7, 365, but AML, KYC, la 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 la. It's all now as equally a pain in the neck as a brokerage account. So it's gone away from those rock and roll years, and that's become just another asset. So I think that's a real drag on the whole thing. Can it go to 100,000? Yeah, it can. Will it go to 100,000? 50-50. If it doesn't, will it go down to 40,000? Probably. So it's just a question of most real crypto people, they say, I don't care. If it goes down, I'll buy more. I'm going to live in a tent and I'm going to mortgage my kidneys. I'm just going to buy Bitcoin. And when I'm 97, I'm going to be a billionaire. And that's the hodlers, diamond hands, Bitcoin maxi people, right? Above that was whole huge piles of people who love to gamble it, love the fact they make a lot of money, probably put most of it back by now. And that's what drove the price. Anybody that did a press conference about anything, the second question would be, what do you think about Bitcoin? Even if it was a a sports event. Yeah. So, but that's all gone away now. So now it's just another asset. It's like gold. Is it a digital gold? Probably. Gold is for war. That's why countries hold it. Gold is for war. Could Bitcoin be for war? Well, what do you know? People like North Korea like it. And what do you know? People in America don't like the fact that Bitcoin could be used by nasty countries to fund themselves. So it is very similar to gold. It is a kind of digital gold. It has a place in the asset pantheon, and it will have a pretty good value. So, I think that long-term view, Bitcoin's okay. Short-term view, it could do really well. But, it's not. 4 years ago, I was saying it's going to the moon. It's going to the moon. It's 3,000. It's going to go to the moon. And it did. Now at 60,000, it's not going to go to the moon. It might double, maybe. So, it's kind of old hat now.
Remember last year when Bitcoin was at 20,000? I mean, 60K would have been the moon for last year's price, right? But now
Well,
that
not the halving coming.
yeah,
Not
now that we're at 63, people are wondering, well, when are we going to get 120? And then when we get to 120, people are going to ask when we get to 500. It just never ends.
Well,
So
the point is the halvening. The
yeah.
thought is every time you halve the new issuance, you get a doubling in price, and that's kind of panned out. But it goes up like a rocket and comes down like a rock, and that's the cycle. Halvening, big rise, comes back down. But if you looked at it further back, you'd see that it's kind of doubled. So now, rather than come back to 18,000 like the last cycle, it would come back to 36,000. And then the next halvening, it would go to, double 60 to 120,000. So that's the calculation that people are making. And like the ones that say it's $1 million of Bitcoin, because one Satoshi, 1 cent is that number, is $1 million of Bitcoin. But as these assets get heavier, so it's harder for them to move. So I'm long. I'm long at Ethereum, so I'm in the wrong place at the wrong time. And I think it can, and if it does, it will be pretty good. And if it doesn't, well, that's just a part of my portfolio that didn't do well this year.
All right, Clem, let's end it here. Excellent thoughts. Thank you for your update today. Where can we follow you?
Well, you can follow me on Forbes, and you can follow me on Seeking Alpha, and obviously on your show.
Yes. Yes, Clem is a regular. We'll have him back soon. We'll see you later. We'll see you in a couple of weeks, Clem. Always good to have you. It's just great because every time I see you, not every time, but most times when I see you, just something's happening in the markets, and you always have a great way of explaining what's going on. So appreciate it as always. Okay. Stay tuned. We'll have more for you. Don't forget to like and subscribe.